The question is, are we turning into a nation of renters?
Yes, we are. Yes, we are. I've been talking about this. I'm telling you guys, affordability is the big thing. Like, we should be in a situation right now where home prices are lower and rents are lower. Now, there are pockets where rents are soft, and there are pockets where rents are declining and there's concessions. I get that. But there's a lot of places where they're actually climbing. And that's even with all the stuff that's actually hitting the markets right now from the construction.
Yeah, and what I think is interesting, you gave a talk this weekend and you said, sometimes you have to keep it simple instead of making it complicated, right? And when we look at the future of renters, you're just looking at home ownership rates. And that's one of the key metrics you look at in an area to know, is this a good place to invest? I mean, how many people own homes?
And I'll just summarize the talk. It was for a global YPO Pacific conference that happened in Phoenix. It's a bunch of YPOers. And basically, I went back to the Clinton-Bush era. Now, the reason why this is important is because I was investing back then. This is in the mid-'90s. And home ownership back then was about what it is now. So let's call it 60. Right now, it's 65.7% home ownership. Now, when you think of home ownership, you should look at the other side of the equation. And that means that if there's let's call it 66% home ownership, there's 34% renters. That's essentially the other side of the equation. So back then, Clinton had this idea that everyone should own a home. It was called the American Dream.
Bush did.
Yeah, Clinton first.
Oh, okay.
And so Clinton kind of started it. Now, what was really interesting is interest rates were being cut during this period of time. Now, so you start to see home ownership go from 65. Now, it doesn't seem like a lot when it starts at 65, 66%, but it went all the way up to 69% under Bush. And Bush did the American Great Own a Home Down Payment Act. So they both kind of worked hand in hand, even though one was Republican, one was Democrat. So you can kind of see the chart from the 90s all the way to 2000s. Now, that was let's call it a 10-year run during that period of time. Now, why is this important? Because if you're a landlord, these people are moving out of your rentals. That's exactly why it's important. Now, as it goes down, they move out of home ownership back into rentals. That's why it's important.
But let's discuss, it went from 69% in 2004 to 63.7% in 2015. And a lot of people, I think, don't really recognize what a big number that is, but that's approximately 18 million people. So
right.
that's many more people that are now renting that were homeowners
right.
at one point.
And that's why what I was trying to point out in my talk was the presidential policies are important, whatever they are. Now, the interesting thing is Obama kind of took it in the chin here. It wasn't even his fault, like all this stuff. So from 95 to 2005, which we know that gray area is the great financial crisis, and you can kind of see how it was 2009 to 2010 that shows these recessions. Well, those are times where there's a lot of houses coming back to banks. Now, why is this important? It's important because if you're a landlord and you're trying to rent to people and it's really, really, really easy for them to buy a home, then they go into that category. And as it starts to unwind, that's actually what made the prices go back down.
Yeah, and so let's look at where we were in 2019. So in 2019, we were at 64.6. So higher than we were, at the low point, but nowhere near where we were at
Correct.
69%. But during 2020, 2021, when rates went down, and because rates went down, more people could get into housing, we jumped to 65.7%. So that's that's right in the middle, basically, of where we were from the lowest point to the highest point. But the problem is that number has now flatlined. Like, not a lot of new people are really getting into owning a home.
Right. So the one thing that chart does not show is kind of the ebb and flow of the price of a single family house, right? And it doesn't show, rents going up or down. Now, generally, rents have gone up during this entire time. Now, we can go into a debate around that as well. But what happened was the rates when Clinton was in office were in the 7 to 8% range, and they were being cut. Now, if you really want to dig in, you'll see that there were cuts and there were the increases and all that stuff during all the administrations. But at the end of Clinton and the end of Bush and the end of Obama and the end of Trump, those 4 presidents, rates went down the entire time on the average from the beginning of the term to the end. So what happened was rates, now they went all up and down during those periods, but at the end of the day, they basically went down to almost zero, the federal funds rate, from let's call it 7 way back. Now I know this is a long period of time, it's 20 years. But the point is this: when rates continued to be pushed down or cut, people would move over to the other side of the ledger, as you would. Like if you're renting or you're buying, you're waiting for rates to go down, and that's when you do it, just like everyone else. And so it actually was hurting landlords during that period of time. And I remember they would flyer our properties and they would say, why rent when you can buy? Rates are going down and all that kind of stuff. So that's why home ownership is really, really, really important. Now, a little bit different scenario. Home prices are over 400 and rates are in the 6-7% range. It's a very different scenario. And so now what we're seeing is a massive gap between the mortgage and the rent.
Right. And if you want to look at Europe, because, Ken always says that we're kind of going into Europe's model. A lot of Europe is a nation of renters, depending on the country. But Jerry, if you want to pull up slide 1, between 2012 and 2020, overall homeownership declined across Europe with decreases of more than 3 percentage points in these certain areas, right? And 3 percentage points is a lot, because when you start to think about how many millions of people that is, that's a lot of people. And
the reasons are the same. That's
right.
The interesting thing. As the cost to buy, you guys all know, like we've all bought cars. When we buy a car, we try to do the least down payment we can, and we're solving to the mortgage payment or the car payment. It's the same with a house, right? So as rates and prices jump around, that's what actually happens.
And I thought what was really interesting was the stark decline in a number I got from out of Spain. It says the decline in home ownership is particularly pronounced among younger Spaniards. In 2023, only 29% of individuals under 30 owned a home, a significant drop from 58% in 2007.
Right.
And that's kind of that number even here in the U.S. we talk about. The average age to buy a home right now is 38 years old, and it keeps climbing. It's climbed significantly since 2019.
It's the same going on everywhere. And what's really interesting is a lot of you guys only watch the U.S. economy, and I get it. Like it's a lot to figure out. You're looking at the U.S. central banks and all the things happening in your particular market, and maybe that's all you have the bandwidth for. But if you step outside of the U.S., you'll start to see that these other countries have dramatically lowered interest rates, and dramatically. And so what's going to be interesting is because they're trying to combat these kinds of issues, exact same stuff that we have. And so in talking with Jeff Snyder, he believes that because all these other central banks are cutting, I think he said Canada has cut like 2.75% on their rates. What's going to start happening is, you're going to start to see more consumption in those markets. And he predicts that we're also going to start to see cuts eventually, even though that's not exactly what we need, because it could potentially create another bubble.
Yeah. And, I was just looking at the data. 5 years ago, the average age to buy a home in the U.S. was 33. Now it's 38. That's significant. That's a 5-year difference in 6 years.
Right. And so that's why this affordability, that's why the title of this is Renter Nation. When you can't buy a home till you're 38, That means that back when I started, when you started, it was in the high 20s. So that's like a 10-year difference of people not being able. That means that they're renting essentially, and so there's more and more pressure, and it's more affordable right now to actually be a renter. The other thing that we'll touch on is the cost of owning a home. When you rent, that cost all goes to the landlord. Right now, for a home, it's just go to Bankrate.com. I've quoted this before, but Bankrate.com did a study that said the average price of a home. Now I'm talking about insurance. I'm talking about property tax. I'm talking about upkeep. I am not talking about mortgage. Is about $18,000 a year or $1,500 a month, just the average. So, in a lot of cases, that's what people pay for rent. So, so what you have is you have a massive gap of the huge jump from the rental side to the mortgage side, and it's going to continue this way until there's something big that actually makes a change.
Yeah, and you have to look at, different areas in the U.S. by territory. The reason the Midwest right now is booming is because homes are still affordable there. I mean, the average home in that area is still $200,000 and some $1,000. So you are still seeing people investing in the Midwest, but also people buying homes in the Midwest. And so like Akron and Canton are two of the top markets right now.
And these are markets that you grew up in. So
they are.
This is not something that Danielle's just pulling out. So you're right. The real question is how many renters are there, right? Like you can buy a $200,000 house, but if a big chunk of people are doing that and they're all trying to pull from the same group of folks that are trying to rent those houses, those are not going to be great investments. So obviously that's the other piece.
Yeah, absolutely. And I think, when it comes to home ownership, a big portion of this is the down payment problem, right? I mean, even if you can swing the monthly payments and you're okay kind of paying a little bit more, you have a large down payment issue now that you need to make on a $500,000 house compared to a house that would have been $350,000 a few years ago.
That's the prediction I'm going to make. That is the thing that the Trump administration is going to have to do. Just like Bush did back in 2000, is they did the Great American Down Payment Act. Just look it up, and you'll see there's going to have to be some stuff with getting people into these houses.
But if you help people with their down payment, it just pushes prices higher.
It could, yeah,
because you have more, buyers in the market.
Yeah, and it'll be interesting to see how flexible they are on their credit and whether, the loan process, obviously, because there's still a lot of people licking their wounds from 2008, when they got really wounded back then.
Well, that's kind of the dilemma, right? Is if you give people help on a down payment, then you invite more people into the market and you're helping them, so prices essentially can go up. And then the other issue is that if you lessen or you ease the lending standards, then we have another 2008 where people are, falling behind, because we're already seeing that on FHA loans right now. The last few years, a lot of FHA borrowers, because they were so tight, even getting into those loans, are, getting squeezed.
Yeah. And as you guys know, the one thing that there was like an 80 million person population growth difference in the U.S. During the last 30 years. It's like it's almost 2.5 million people a year. Now, a lot of people don't think about this. If you just Google what was the U.S. population growth in 95 and what was it in 2025, you're going to see it's about 78 million people more. Now, obviously, a lot of those are young and they're babies and they all got to grow up and all that stuff. But the people that were born in 95 are now renting and they're, now getting ready to buy houses. And so you really do have, obviously, whatever the number was back then, it's, as George Gammon likes to say, it's the pig moving through the python. You're going to have this big surge of people. So you have that. Plus you have immigration, which of course is super controversial right now. But you have births plus immigration minus deaths, and that is your net number. And just Google Fred, RFED. or FRED, and the St. Louis Fed, and just type in home ownership, and you'll see, you know what has happened there. And I'm telling you, the population growth is what we would call the demand, and then you have your supply. And what happened from, and this is the point I was trying to make in my talk. When the great financial crisis happened, and I was right in the middle of it, 2007, 2008, you think about just the mindset of investors and banks, and just go back there and think of that. Well, you know, your borrowers are defaulting and they can't pay, and everybody's values of their homes is going down. And this all happened 2008, 2009, 2010. The very last thing that happened is lending to build new stuff. Like, you know what I mean? So as you're starting to take back all this real estate, you know, and there was I think there was like 6 million people that were in foreclosure during that period of time, 2008. So the point of this is that there's not a lot of new development and construction going on during a period when a bank's taking water in the boat. That's all. And so what does that do? What you have is back to this population growth. When you have population growing at 2 to 2.5 million people a year, and you don't have new supply being added, and this started in about 2007, 2008, for almost 10 years, there was not a lot of new construction. And we kept, during that 10-year period, there's like 20 million plus people that were added to the U.S. And so now you have all of a sudden that baked in demand. And so all you got to do is kind of follow the math here. You know, when do people turn 18? When do they turn 20? When do they turn 25? And what are their behaviors? Well, the first thing they try to do, at least, is they move out of their parents' house if they can. Although that's changing. And then they go to college if they can afford it. And then they eventually rent. And then they eventually, hopefully, can buy a home. That is what we've all done, and that's what a lot of people aspire to do.
So let's also touch on why they can't have a home too. You know, you can't overlook the student loan debt issue that is new to the last couple of generations.
That's a good point.
And then also the credit card debt issue, which is also fairly new to the last couple of generations, because credit cards didn't used to start being like a thing everyone just did until about 20 years ago. You know, before you would pay cash, you would pay check. You know, it wasn't.
One of your very best friends went to school to be a doctor, and she's several $100,000 in debt.
Right.
And she's renting.
Well, she owns.
She owns now?
She always, because she bought the home before she took on
Oh,
the
that's
debt,
right. Yeah. And so she's locked into that house. Right,
Yep.
right. So she bought it before, but there's we do have friends that have these big student debt numbers, and they're renting.
Well, because what people don't understand is, you know, the bank looks at your debt to income. So what your monthly payments are versus your salary. So if you have credit card debt that's at like 30% right now, or you have student loan debt, that all goes against your debt to income. And so when people are coming out of school and they have these jobs, and now these wages have been eaten away by the inflation, they don't even qualify for the loan based on what they're making, even if they somehow do save for the down payment.
Right. So they're stuck. Right. And so you do have those additional things. And not to mention the fact that last I looked, I think the interest rate on credit cards was in the 20s.
Yeah, it's in the high 20s, if not 30s.
Is it?
Well,
Yeah.
here's the crazy part is I almost think that, you know, this new generation, you know, we were watching a show the other day on, you know, this welding school that's coming up that teaches kids to work on cars. I kind of think this white collar generation that was the millennials and Gen Z
it's toast.
is toast, because people are realizing that these student debts that they're taking on versus what they can make versus someone that learns a trade or even just doesn't even go to school is not that much different. And then the debt, you know, makes it not make any sense. So it's just kind of interesting to see how that is going to kind of
How many more wealth planners do we need, or financial planners?
Right.
You know, the financial services industry is is going to really be changing. And by the way, I'm talking about insurance, and I'm talking about how easy it to get insurance is. It's kind of like when I was younger, we used to have to use travel agents to actually go places, right? Now that's all online. And there's tons of predictions that realtors, mortgages, insurance, wealth management, stock picking, which you're already seeing, a lot of this stuff is gonna eventually move that way. And also because we own a construction company, guess what we're having a tough time finding? Trades, plumbers, electrician, drywall, that kind of stuff. So if you're in that business, you're crushing it right now. And so the colleges, as we all know, went after all the high schools that they could, because every single kid is a customer, and so they get them in debt and they run them through school, and they dangle a white collar job in front of them, and there's just too many of those right now.
Yeah, absolutely. And I think you look at, and somebody brought it up here on YouTube, kids don't necessarily want to own a home like they did. I would agree in the fact in your 20s, back when we were younger, that was aspirational.
Yeah.
Now it's kind of cool to rent and be mobile and everything. But I still think in your 30s, that changes back, right? Because you start to have kids, you start to get more stable in your career, you start to be more stable in your area. And you're realizing that through your inflation, your rents keep going up. And you want something that's stable, right?
Family formation's down too, which is very interesting. Yeah.
It is. And I think that does play a part. But even me, when I didn't have any kids, I still wanted that set payment, because you start to think about retirement in like your mid 30s, and then you realize how hard it's going to be to retire if you have a mortgage or a rent payment. It's going to be this big barrier. So I think people do start to want homes later than they used to, but I still do think people do want homes overall.
Yeah, I think that's true. And I think right now we're more global than we've ever been, and we're more mobile than we've ever been, and so kids graduate and they move to Austin, or they move to Nashville, or they move like it's so much different, right? Which is also part of the reason, right? Because you go there and you don't know if it's going to be short term or long term or whatever it might be, and also the employees and employers. They're not as loyal to each other anymore.
Correct.
And so there's turnover. There's shorter term durations on both points, and so you are seeing a little bit more mobility happening, and that's certainly driving some of this.
So let's talk about the long-term impacts of a renter nation, because you have to think the U.S. was built on the American dream of owning a home. Every retirement system, everything we have is around the fact that by the time you retire, you own a home outright, don't have any payments on it.
I have a real strong opinion on this.
Okay. Go ahead.
So I think that we kind of have the tale of two nations going on. So if you're in the game from a hard asset standpoint, like you own a home, maybe you own gold, maybe you are in the crypto, or maybe you're in the stock market, you have this kind of false sense of security, paper equity. You look at stuff and you're like, I'm in the money. I've got some cash. I've got this. I've got that. And then there's the other side of the equation. Call it the working person, right? That may or may not be in any of those things. That's just kind of just trying to get ahead for whatever reason that might be. And so you have these kind of two spots that people are in right now, and all the talking heads and all the people that are on the internet and on TV and all that kind of stuff, they're not seeing the squeeze down of the people that are call it paycheck to paycheck. They don't have the money to invest, and they're the ones getting hammered right now by inflation. And so this is kind of the point about the renter piece, and this is how I'm tying it back. There's something about paying your own mortgage, and you're actually paying down your loan. And there's something about owning something with fixed rate debt that's appreciating with the inflation economy that that we're in. So if you have something that's worth $100,000 and it's inflating at 2 to 3 or 4 or 5%, let's say, just naturally, you're going to be in a better position, and you're also paying that down. So in a 10-year period, you're actually building equity, even though you might not see it. You don't realize it until you sell. But there's actually, you're actually contributing toward your financial future that way. If you're renting, it's very different. It's you're obviously paying somebody else, and now you're sticking your money. And I'm not saying you're not investing, but you're sticking your money in other things like crypto or the stock market or whatever it is. And I think that you're just in a lot less control and much more speculation on that side of the equation.
Yeah, and people are talking on YouTube as well. There's a couple people, they don't have any kids, they rent, but they have investment properties. Yeah. But they're really doing the same thing, because even if you're renting, because say you do want that mobility, but you have investment properties and you have tenants paying down your investment properties and getting that equity, it's really the same thing, because at the end of the day, if you wanted to, you can move into that house someday.
That's
and as
right.
Your rents go up, the rents you're charging are going to go up.
That's very different. That's exactly what I did. Is I was actually renting when I bought my first rental.
Yeah.
So that's common, and that's again. But now they're in the game. Now they're in the hard asset game, and they have choices. But if you're just renting, and you're moving around, and you're consuming, let's say, and not producing. So producing to me means buying something and somebody else is paying it off for you, right? You're creating a job for a property manager. Maybe it's you, maybe it's a side hustle, whatever it is, but you're actually doing something. When you're just making money and consuming, you're actually benefiting other people. And so, like to your point, you can rent, and you can still be in the hard asset categories. But I think that that's going to be the big difference, and that's going to be the clear loser or winner is going to be the person that rents and never gets into the game, because there's massive rent growth. There's massive inflation. The food costs are going up. Insurance costs are going up. Gasoline and oil and car prices and all those other things. And they're making 3%, let's say, annually on their W-2 job, and it's not even close to keeping up with inflation.
So let's go into that social and economic consequences of people renting, because they're big, right? So as Ken was saying, you can have two people living next door to each other. One's in a great place because they have a fixed rate mortgage, and the other person is in a harder spot because their rent keeps going up. Because of that, you have more reliance on the government and government housing programs. So right now, we're mainly seeing government housing programs just for the lower income families. However, in Michigan, we saw that they just bumped up, I think it's $120,000 per family to still be able to qualify for Section 8.
Right.
So in some kind of assistance. So we do think if more people are going to be renting, then there's going to be more government programs to cover this rent.
Yeah, there's going to have to be, right? That's exactly right. And there'll be all kinds of incentives for landlords to produce housing, because the government has proved that they're not very good at it. And so what they've done is they've created, that's why you get all these tax benefits. If you want to see what the government wants, just pay attention to what they're passing on the tax side. And, I have some friends that are kind of high up, and there's apparently a whole tax bill coming out around Memorial Day of this year. So Memorial Day is coming up, right, in May?
Yeah.
Yeah. So not long. We should see a pretty robust tax plan. Now, I'm not sure what's going to be in it, but I would guess bonus depreciation, cost segregation, depreciation, and the carried interest and all the other things. And the point is, you're going to start to see more and more and more stuff to incentivize people, to your point, And the government is going to have to do something because I can't see a way around inflation. Even though inflation was down just in the last report last week, with everything that we have moving forward, I just don't. I think we're always going to be hovering in the 2 to 4% inflation range.
Yeah. And so when it comes to, these affordability issues, people are asking, how can the government change this? How can we see a rise in home ownership again? And really the only reason I think we saw such a drastic rise is because of COVID and what happened, and they dropped the rates to almost zero. I don't know if we're going to see if that's going to be a thing again, right? And even with these new prices, it still makes it very expensive. So there's really only a few things the government can do to help get people into houses. And we touched on them. You can increase down payment assistance for first-time home buyers. You can lower FHA loan requirements, and you can do tax credits for first-time home, but you can't do anything else. And but the problem with that is you're allowing a lot more people into the market, which could raise prices, which is good for those that already have homes. And then if you're ease the lending, you could have another 2008.
But you could also do stuff on the other side of the equation for developers and contractors to build housing, right? And you could make zoning a little bit easier. You could make the impact fees, which is basically the cost, to plug into all the utilities and those kinds of things. There's a bunch of things that you can do. I know Trump talked about actually taking over some federal lands and rolling those back in and making more land available. So now I'm sure it's a combination of all those things. Certainly the opportunity zones, those are on the chopping block. Which he started, and they end in 2026. That's another one. So I think there's going to be a whole bunch of things that are going to be on the table on the developer side, because the one thing that helps a consumer is more options.
Well, right. But also it's getting more expensive to build,
That's
especially
true.
with these tariffs. If that goes into play, you're going to have even a higher increase to build a home. And, typically zoning laws and what people build are very local. And the interesting thing is that once people own houses, they don't want affordable housing by them. They don't want, they don't want zoning changes. They don't want multifamily. They don't want apartments, so they want single family homes that are similar to theirs in their neighborhood. And that's at a local level, and that's going to be hard to change no matter what Trump or the federal government or even the state government changes.
Well, I'll tell you one thing that shows up at every cycle. Like right now, it doesn't matter if the 80s, the 90s, the 2000s, I've been watching this. The very first thing that a developer or the contractor can do is lower the square foot. So now, think of a 1,700 square foot house. They could easily whack off 200, 300, 400 square foot out of that. Daniil bought a 2-bedroom, 2-bath house with a 2-car garage. You can't find very many 2-bedroom houses. But the fact that she was able to find a 2-bedroom house makes it a great rental. Now, that is not something that you typically build.
Right.
If you're going to build a 2-bedroom house, you might as well throw a third or a fourth on there. Oh, well, the reality is that third or fourth does cost. And so if you can lop that off and build a 2-bedroom or even a small 3-bedroom, with Jack and Jill baths and all these little things, I'm telling you, the actual design of the home is significant. One of the things that we did is, if you guys remember, apartments always had those like really funky dining room light hanging down in front of the sliding glass door, and then there's a patio outside. Well, nobody sits at those. So we brought all those back in, and we saved about 150 square feet just in one floor plan that way, and pushed it into these, lower countertops and make it more like a cafe in there in the unit. So unit design is the first thing that happens. And so you're going to start to see that. You're going to start to see smaller homes, because as prices go up, if you're building a 16, 17, 18, even 2,000 square foot house, and you can build a 1,500 square foot house, then you're gonna be able to deliver that for almost the same price.
Well, so I was talking to Brady on YouTube, and he's a builder, and he was saying that 900 square foot homes just got approved in his city versus the minimum of 1,200.
That's exactly it.
He's considering it, but the profits are better in the bigger homes versus the smaller homes, but there is demand for the smaller homes. So basically what he was saying is if he can still sell the bigger homes, he'd rather do that. If those start to stall, the smaller homes is what he might move to.
So the right thing to do is to figure out an incredible 900 square foot floor plan and do as many as you can, because I guarantee you the difference. Those are going to fly off the shelf because you'll be the entry point for most people, which is what they need. And now they're in the game, and they can buy the 1,500 square foot or 1,300 square foot from you later.
Yeah, as long as you can get a good piece of land to put them on too, though, because you want to make sure you're building in places people want to be.
Well, that's why I think that's interesting. Very interesting to see where that happened. But that was super smart. And somebody's progressive saying we need to allow smaller houses, because part of zoning does restrict the height and the size, and some people don't want a 900 square foot house on a parcel. I know there was a time that we did this. We would get 7 houses on 1 acre.
Yeah.
Like a little mini neighborhood. And I'm telling you, they flew. They just crushed it. Everything we did.
Well, it's interesting because I know in Arizona, Katie Hobbs, our governor, just passed something where the setbacks have to be less.
Yeah.
But they still need the setbacks the same on the garage. So it doesn't really help that much as far as, being able to build more, because you still have to have that setback at the garage level.
Yeah. So that's going to be the
trying.
next thing. That's one way to make things more affordable. On the apartments, we're seeing 300, 400 square foot apartments, studio lock-offs, and just with a really, really beautiful kitchen, but the bed is out in the one room, right? You have one room and a bathroom with and that seems to be fine and plenty for a lot of people.
Yeah. So let's look into the third thing, because I think institutional investors really get a bad rap, because they do make prices go up. But you also have to think that not everyone can buy a home. So they also provide rentals. Like if you didn't have the institutional investors changing homes into rentals, then everyone would have to own, and the people that rented would have less options. So they get a bad rap, but there is that is a piece of the puzzle. But it feels like the government is more welcoming those institutional investors than putting up roadblocks.
Well, the irony is that every big home builder, whether it's I won't name, but you guys know who, Toll Brothers, Pulte, all those are all institutional investors.
Right.
That's what they are.
Right.
You're just buying one from, you think it's a local builder, but it's a public company. That's been going on for a long period of time, right? And it's going to continue.
Yeah. And then the last thing is to improve wage growth, because that will improve economic stability. And love him or hate him, I think that is what Trump is trying to do. Now, whether he'll be successful or not, that's to be seen. But, trying to bring jobs back, trying to grow wages, because the whole issue with this whole thing is the wage versus the price of the home. Because if you look in the 60s and like the baby boomer age, one income could pay for your family to have a home and your partner not to work, right? Now you need 2 people working. You still then might not even be able to afford a home. And that's a wage/price of home issue.
Yeah, I just don't see that happening, though. I personally, and I'll tell you why. Like, inflation is hitting all my company, all my friends. I was talking to somebody just the other day. He has 160 employees, and now it's 110. And I said, how can you do that? And he said, mostly, a lot of the jobs, I'm trying to figure out how do I use AI and ChatGPT and all this stuff for a lot of the things that could be more automated. So, and the only reason he started looking at this was because of his labor costs. Mm-hmm. Labor costs are the biggest cost. And, so I totally get it. They definitely need wage growth for sure to be able to keep up with inflation. But as from an employer standpoint, it forces the employer to be much more efficient, and try to figure out how to still maintain their business with the least amount of employees.
Yeah, and Armid mentioned something as well, and I think this is important because everyone just wants smaller, affordable homes built, but the government also puts up roadblocks, zoning being one of them. But he also said, the smaller the house, the harder to justify the cost per square foot.
Yep.
The impact fees have increased and have a huge impact.
He's right.
And those are the development fees. Like when somebody goes to build a home, they have to pay the city their development fees. And, if it's, I don't know how they do it, but if they do it where it makes more sense to build a bigger home, people are going to be building those. And if they really wanted affordable housing, they could incentivize people through things like impact fees
What's
to
the
build
same
them.
thing? Who are the voters? The people that own homes. And if you own a home, the last thing you want is affordable housing, over your fence, right? So that NIMBY, not in my backyard, that's a real thing. And so they're pounding on it doesn't matter who they are. They're pounding away on the city councils or the local folks, and they're saying, we don't want this, we don't want this, we don't want this. So there's going to always be that battle, and that is going to be part of it. So there's a fair amount of political pressure not to relax zoning and not to have renters and renter nation, all that kind of stuff. At the same time, without supply, you're going to have prices and rents are going to go up and house prices are going to go up, because the only way to combat this population growth that I mentioned earlier is a supply.
Yeah, absolutely. Well, awesome, guys. We will see you next week.
Cheers, guys.